Welcome back, everybody. Great to have you all in the room and into such silence. It's great to see so many conversations going. It's always a very good sign. My name is Patricia, and I am responsible for equity origination at the JSE, and it's a real pleasure to be here. We've definitely given you a full pack agenda, giving you an overview of the JSE, some recent updates or some information about our recent listing reforms, recent IPOs and transactions by Richard Sands, of course, and the broader kind of investor landscape and sentiment on the JSE. Now, for our next panel discussion, we're going to dive into understanding the investor landscape. So really during this session, we will talk a little bit more about market trends, investor appetites, and of course, the economic factors influencing those investment decisions. So we hope that through this panel discussion, you're going to get a better view of South African appetite for inward listed companies and, of course, the nuances. My colleague, Maurice Madiba, the head of primary markets, is going to be moderating the session. Maurice, if I can ask you to come up together with Say So, please.
All right. Good afternoon, everyone. And thank you for joining us at our second Capital Markets Day in South Africa. My name is Maurice Madiba, as Patricia mentioned, and I look after primary markets within the Johannesburg Stock Exchange. So that is a lot of the new listings in equities and fixed income, as well as specialist securities. And we've been on a road trial, I guess, for the past week. So a few of you have been in meetings with this week already on the London leg of our international roadshow. But joining me today as we kind of delve into understanding the South African investment landscape or investor landscape, this is really where the money is. This is where, if you have deals and transactions, the people that you want to be speaking to. So I'll take a moment to introduce my panelists, starting with the ones that are online. We've got Sonia Saunderson. She's the Chief Investment Officer of the Eskom Pension and Provident Fund. It's one of the largest, it is the largest self-administered pension fund within South Africa, very revered in the market and many years in operation. And Sonia herself has been in the financial sector industry for over 20 years, joining us from Momentum, so welcome to you. Joining me then also is Njabulo Ngubane, who is the Head of Mergers and Acquisitions at JP Morgan South Africa, looking after sub-Saharan African M&A activity. And he joins us online from JP Morgan South Africa office. And then we've also got Inga, who's co-moderating with me. So he'll ask a few questions. He is the equity strategist at JP Morgan South Africa. So he'll handle the second half of the questions. And then joining me in person is Tace Lowe from 91. If any of you remember Richard's slides, they were right at the top in terms of assets under management within the South African investment landscape. And he looks after emerging market strategies in the fixed income space at 91, and it's based out in London. So welcome to all of you, and thank you for joining us. Let me start with you, Tace, as we try to get a good understanding of South Africa. We had the governor speak to us a little bit earlier and addressed some of the more macroeconomic issues. But as a dealer in bonds in emerging markets and in South Africa, how have you been dealing with some of the uncertainties we've seen this year, whether it's inflation or it's the turning of the tide in terms of interest rates? Where do you see South Africa positioned there and also over the next year?
So I think South Africa has actually gone through a bit of a step change this year. So within all the factors which you mentioned, it's quite interesting if you look at South Africa performance relative to the rest of the year. And South Africa really stands out. And I think investors have essentially given their vote of confidence to the GNU, right? So South Africa's always had some strength, always had a deep, liquid, local market, so it does not rely on dollar debt to the same extent some other emerging markets have to. It's got a very well-regarded central bank, but it always had this lingering political and fiscal risk. And I think what's happened since the GNU is South Africa credit spreads, for example, are pricing a credit rating upgrade. They have 5-year lows. SAGBs have rallied about 100 basis points, while the likes of Mexico and Brazil have faced continued pressure from all these kind of more global uncertainties. And the rand, which used to be the thing which you shouldn't be ever uncertain about the world is still up 4% year to date, and the real effective exchange rate has rallied about 7%. So clearly investors are putting their capital, fixed income investors are putting their capital to work in terms of backing this government. And I think if you think about the year ahead, there are a lot of uncertainties, right? The most prevalent one happening in a week's time. And I think within that, again, from a fixed income perspective, we need to be quite careful. We're not running a lot of risk. But within the whole EM investor landscape, I think South Africa still shines pretty well because of these kind of strengths. And I think something like the MTPPS, where we would have been worried about, the fiscal slippage, the VAT revenue underperformance, I think they continued to anchor themselves on the debt stabilizing primary balance. So I think the things which we will need to see from South Africa to sustain this outperformance is really around fiscal, continued fiscal consolidation. It is around growth enhancement. So the big issue for South Africa is it can't be growing at 0.7% year on year, and dealing with those kind of issues. I think that will be quite important for things like equity investors. And then finally would be the sustainability of the GNU, which again, for now, I think we've been all positively surprised about that.
Wonderful. Let's move to you, Sonia. EPPF is one of the largest investors, not only in South Africa, but on the continent. And you play a vital role in terms of financing some of the developmental sectors. Earlier, we heard about the Operation Vulindlela, and also about the infrastructure investment that's required to really grow South Africa at the correct rates. How is EPPF aligning its strategy to some of these opportunities and government initiatives?
Sure. Hello, Maurice. Hello, everyone else. Thank you for the opportunity. You're right, Maurice, that our government has been asking institutional investors actually for quite a number of years to get more involved with initiatives like Operation Vulindlela and for the private sector and for pension funds specifically, as well as government, to work together in terms of funding the infrastructure gap that we do have in South Africa. So, of course, if you talked earlier about Operation Vulindlela's focus areas and the 19 priority reforms that's in play, then you will know that the whole idea behind this is that we as an industry help reduce the input costs, lower the barriers to entry, as well as help effectively increase competition in our economy. For us, the main focus areas as a large institutional investor has really been around electricity, first and foremost. So energy supply, we know, has been a real big detriment in our economy to grow, and therefore also really perpetuating intergenerational challenges that we've had for many, many decades already in South Africa, and trying to address that. We are actually and have participated quite successfully and meaningfully in generation through the REAP program within South Africa. There may be more opportunities, of course, in future in the bid window 5 and 6 that's now coming to the fore, as well as opportunities in the hydrogen economy, albeit it's still in a nascent level. It seems like there could be particular nice opportunities in the pipeline, and also the storage part of the value chain that we're planning to get involved with. From a digital communication perspective, that's another area where actual reforms is making additional spectrums available for mobile communication. And our potential participation really is around data centers and lower infrastructure, so a little bit further down the value chain, if you will. 2 steps lower, but something that we believe there are great investment opportunities in. Certainly a lot of upside that we see, and also diversification, of course, in our portfolio, as well as the benefit of what it can do for our society and what it can do for job creation and also just better opportunities. The next wave, I think, is then also around water, although at this stage it looks like water is really always going to be in the state-owned space, but there could be participation in lending opportunities directly to the water board or other funding individual projects that may come to the fore. And then, of course, a lot of transport opportunities as well. So government intends to really allow private operations on Transnet's rail network, and EPPF as a potential participant through the sale and lease arrangements is something that we are busy looking at right now. So there's really a whole host of opportunities. I think one of the things that we are very excited about is not just what we can do for our members in terms of where we can invest, but that we also, as one of the largest corporate investors in South Africa, we've recognized the need for us to work much closer together as mobilizers of assets in the economy, and also as institutional investors to make a meaningful difference from an infrastructure investing perspective. So we have been working as one of the large pension funds with the rest of what we call the Asset Owners Forum in South Africa, where the top 20 largest pension funds are working together to try and create a vehicle and also securitization in a listed vehicle, a space for us to really pull assets and IP together to make sure that we work together as an entity, so to speak, and asset owners themselves really getting more involved with sharing the risks, sharing the investment opportunities as well as fees towards creating this more democratized and mobilized world towards infrastructure. So that's another interesting response that we are busy working on right now. We've been working with the World Bank as well as National Treasury in terms of investigating the pros and cons of various vehicles and structures that can help facilitate that movement. But we are really trying to make it more accessible, infrastructure investing, more accessible to other pension funds, smaller pension funds specifically, as well as retail investors in the market. And that's another big area of focus for us, is to make sure that we develop this successfully for the industry.
Wonderful. Thank you for that. Hopefully some of those vehicles make their way to JSE. Look forward to that. Let me move to you, Njabulo, at the forefront of M&A activity. So Njabulo, M&A transactions across sub-Saharan Africa, very interesting space. We've seen a lot of international interest, particularly in sectors like fintech, energy, telecommunications. What are you seeing as some of the key trends across M&A in South Africa for global investors, as well as whether South Africa is still positioned as a broader entry point into the rest of Africa?
Yeah, thanks, Maurice. Good afternoon to everyone, and very happy to be part of this JSE Capital Markets Day. So maybe just start off with the trends that we're seeing in cross-border activity before reverting back to the role of South Africa in what we're seeing as this cross-border activity. So as you quite rightly point out, technology and fintech are very in demand at the moment because they speak directly into financial inclusion, and we're seeing a lot of investor interest in a number of markets on the continent in the space. And you might have picked up some of the recent transactions that we announced relating to some of the key telcos. But this sector is really attracting demand from the West in terms of US investors all the way up to China, Japan. So I think the sub-Saharan African region is very well placed to play into that space and attracting a lot of interest. Also, just staying with the telecommunication space, there's obviously still a very high demand for connectivity. So Sonia earlier mentioned some of the sale and leaseback stuff. So you're seeing a lot of the infrastructure that relates to telecommunications, whether that be towers, fiber businesses, etc. You're seeing a lot of creativity around structuring around those opportunities. So that's another key trend that we're seeing. And of course, on the renewable energy side, the interest is still there. I must say that in the last 2 years, it's a bit more tapered, as the energy transition story is an evolving one, but still very deep-rooted interest in the long-term outlook of renewable energy. And actually, South Africa, through the reprogram, as Sona mentioned, has attracted a lot of interest because it's created platforms that allow you to expand into the rest of the continent. Now, in terms of the PPA structures and the currency denomination, South Africa is slightly different to other African countries, but that's where we've seen the more scalable platforms coming to market on the renewable energy side. And then, of course, to reiterate some of the points mentioned earlier around infrastructure development, we're seeing a lot of interest in actually backing Africa-focused infrafront, but we're also seeing them looking at more opportunities to deploy in the sector. And also in the renewable energy side, they're also very active. So to your question, Maurice, around some of those platforms making their way to the JSE, we're seeing a lot of activity in the private capital side. And hopefully some of those stories starts to make their way onto the exchange. And then just in terms of the South Africa's role in the broader region. So in terms of the location, I think we're still very well positioned. When I started banking, we were certainly the gateway to the rest of Africa. I think now we are one of the gateways to the rest of Africa, definitely on the southern part. But if you look at the eastern hub or the western hub, there's a lot of strong demand for investment there because the macro environment, the political environment is very stable. So we are now seeing increased competition with our sister markets in terms of us being key entry points. But in terms of the development of the financial sector, including the JSE, as well as our very deep banking market, South Africa is still a very key attraction for investors, even those that are looking to invest into Pan-African stories. So that's broadly what we're seeing in terms of trends in the region, as well as the South Africa's role in this activity.
Yeah, thank you, Njabulo. And I think it wouldn't be difficult to guess which those two markets are, as your CEO was on a recent tour of the African continent. So with you, Sonia, if I may ask, emerging markets was brought up also in Tace's opening comments. And we looked at Mexico, Brazil, China, as some of those global emerging markets that investors are looking at. What kind of differentiates capital that finds its way into South Africa versus some of our emerging market counterparts?
Yeah, I think it depends on which type of investor you're looking at and what they're looking for. I mean, we, for instance, sit in a South African market already, emerging market already, and we have home buyers by Regulation 28 that does require us to invest in South African markets. So, of course, we're always going to look for something that will diversify what we already have in our portfolios by virtue of having to have our own buyers in South Africa. So when we look at other emerging markets and when we look at the opportunity set that they give us, we do look at something that will give us a little bit of protection, that will give us diversification through a cycle, and where the return drivers are not exposed to the same macro events over time. So, and I would imagine that other global investors would do something similar when they evaluate South Africa compared to other emerging markets globally. From a perspective of there's certainly unique challenges. I think Thijs was saying it earlier. There's certainly well-known challenges when it comes to energy, political risk, stability, the grey listing of South Africa. There's a whole host of things that I think have been deterrents in terms of South Africa being a safe haven from a emerging market perspective compared to some of its global counterparts, as you mentioned. I mean, if you just look at what China has been doing from the stimulus package this year and how the markets loved that and how it led to the rally in their equity market, and you compare that with some of the policy reforms in South Africa and how we've been struggling to get our growth rates up, you can certainly understand why, for various reasons, there are China, Taiwan, Malaysia, even India, the last few years, we've seen a tremendous rise and support for those economies. But from a South African perspective, I do think there are a couple of things that sets us apart in terms of it still being an attractive haven, not only because I'm sitting here and residing here and having to have a South African market exposure already, but it's really boils down to some of the things that were mentioned, the government of national unity that is well received, the growing population within South Africa, the real desperate need to make sure that we solve for the energy crisis and the opportunities that could pose for from an urbanization perspective, from a population growth changing perspective, and also the role that South Africa plays within the rest of the continent in Africa and sub-Saharan Africa in terms of energy supply, in terms of water supply, in terms of trade agreements, but also in terms of things like the biodiversity richness within South Africa. The fact that we've got a very heavily based, commodity-based economy in South Africa are all reasons why, as our social demographics change and as populations keep changing within South Africa, all of these are posing great opportunities, combined with the fact that from a valuation perspective, our companies are still, even despite a good year the last year, our companies are still pretty low valued at attractive valuation levels. And so from that perspective, I think there's a whole host of opportunities that make South Africa a favorable destination, notwithstanding some of the risks that we are still facing. And I think that a lot of evidence in the last year showed us already why there's overall positive sentiment. If you look at the manufacturing activities that have started improving, if you look at the PMI numbers that have increased over the last while, if you look at the business activity, the new capital formation, and our government and private sector are, albeit slow, but are increasingly working together in terms of creating better opportunities. And then how this government of national unity, despite just an overall much more positive sentiment about what we can achieve together, also the focus in terms of policy reforms that is starting to really come to the fore increasingly. And so one by one, some of the challenges are being knocked off, and therefore if you combine the opportunity of what that could mean for the long term, together with the valuation metrics of where we currently are, it certainly is a very attractive destination, but certainly there are other emerging market counterparts that also have attractiveness in it. But I think we do sit with a unique set of tools, skills, and resources within South Africa that makes it very attractive for the long term.
Wonderful. Thank you for that, Sonia. So I'm going to move over to my co-host, Inga. I know he's got some burning questions that he would like to ask the panelists. And over to you, Inga.
Yeah, thank you, Maurice, and thanks for having us this afternoon. Hey, so I think the question before that Sonia was answering, the one that I want to ask to you, I think it relates somewhat. I mean, something that was interesting for me is that in recent years, there's been increasing debate about the 60-40 rule in DM markets, how, that could lead to sub 4% growth over the next decade. And in many ways, how EM could actually save that asset allocation split. In your view, when we talk about South African equities and bonds, how do domestic and offshore players look at this asset class?
I think Sonia has actually made a couple of the points for global investors. I think EM has, there's not a point about South Africa, but EM has kind of had a bit of an identity crisis, right? So post, I think over the last essentially 10 years, a lot of this has to do with the performance of EMFX, but you had essentially early 2000s rise of China. And then, over the last 10 years, it really has been a dollar and US story. But I think looking at it now, and I'm kind of leveraging off a few things Sonia said, I think EM has a couple of interesting elements to it. So first of all, DMs are becoming more EM. So there's a bit of an EMification of DM. So your DM book, just look at gilts today, post the budget. I mean, the volatility in DM bond markets probably makes South Africa looks like a much safer space. So volatility and bond volatility has probably become much more equalized between the two. Second, I would say is the diversification element to emerging markets and South Africa kind of within it, because you have unique drivers. So the initial point was you have a year where we've had a lot of things thrown at global markets. You've had ups and downs in inflation. Initially, there were 8 cuts priced in the US, and we've moved back to 4, and recession, inflation. And within that, South African government bonds have performed exceptionally well. South African equities have started to re-rate on this government of national unity. And these domestic drivers were more than sufficient to offset any of these kind of global macro fears. And I think from a portfolio allocation perspective, that lack of correlation is incredibly important. And then the final thing is to the point of valuations. And I think that is also important. And it's true whether you look at equities or you look at South African local bonds, where I spend more of my time. Assets, real rates are still cheap relative to what you get in the rest of the world. So now you have an asset which has a diverse set of drivers, has lower correlation relative to what you get in your DM equity or DM bond kind of book, and still has a reasonably strong valuation anchor. So I think those are the kind of elements which I think support an allocation to EM. And this is whether you talk about EM equity or the EM bond space, which we can be quite different. But I think those 3 elements support an allocation to it. And the final point I would make is generally investors are quite underallocated to it, right? Because you just had to own Mag 7 and go to sleep, and life would be fine. But we might be entering into a different cycle now.
Yeah, absolutely. Very good points, Tace. Sonia, I want to go back to you. You touched on some interesting aspects of involvement within the energy space, from generation and some of the work in the storage technologies. Something that I think is reaching a more crucial debate when I talk to my client base is the transmission build out. I think we have about 26, 27 gigawatts of capacity left. Most of the provinces that are most attractive for the renewable technology are in the Eastern, Western, Northern Cape. So there is really a prime focus on that transmission rollout. And we have an understanding that 2/3 of that 400 odd billion rands of investment should come from the private sector. What do you think your role or institutional investors' role is when we start talking about the expansioning of the grid? We are seeing some waves on the generation side, but I guess the transmission part of it has been more slow.
I think institutional investors, first and foremost, have a fiduciary role to its members. I mean, in simple terms, we can debate what fiduciary means. We can debate where your responsibility begins and ends. We certainly at the EPPF see it as we need to generate good financial returns so that the member, the pensioner, ultimately can one day live in a comfortable or have a comfortable lifestyle. But we also certainly believe that our fiduciary role is to make sure that the world within which he can spend that money that we solved for is also a comfortable world for him to live in, and not just for himself, for his family, and for generations to come. So for us, we very much see it as our responsibility to participate in challenges in the ecosystem that our members are facing. Sometimes those challenges are social injustices and demographic challenges and disparities from the past that we need to address. And other times it can be things like energy and problems around energy transmission and distribution within the country. So we always want to be responsive to look at places where we can get the best financial returns for our members, but in a way that also has a meaningful impact in how the world is going to look at how they will ultimately retire one day. Our approach is therefore, and if you think about the whole sort of energy mix and also climate change and climate action as it evolves over time, our approach has really been to consider the science of climate change, the science of energy needs, the science of how those, alongside the social and economic implications of our actions, can form a just transition for our members. I mean, I suppose more so than any other pension fund in South Africa, our members' salary are dependent on how the coal economy and the just transition is going to happen. And now we're managing their pension funds very well, knowing that their salary is also, and their livelihood is also linked to this. So it's very important for us to make sure that we keep that just transition into account, but to look for opportunities where we can be responsive to how we can invest in terms of that. South Africa, of course, being a signatory to the Paris Accord, is slowly transitioning away its energy mix from coal into lower carbon sources of energy. And to ensure security of the supply and the transmission, as you talked about earlier, in the short term, reliance on non-renewable energy resources is inevitable. And it's not just about those resources, but then thinking, well, what does it mean for our members? Are there educational activities that we can participate in so that they are reskilled for a different sort of economy where they can also have a role to play? We believe that the phasing down and eventual phasing out of fossil fuels and the whole energy mix is something that we need to not be scared of as Eskom's pension fund, but then that we need to make sure that we stay at the forefront of what's happening in that space and that we are responsive to it and that we, as fiduciaries, responsible for the outcome of what our members are ultimately going to experience. So the investment actions for us right now is to look for more energy efficient ways that we can invest our members' assets. We need to make sure that from an active ownership perspective, we remain committed to the targets. We are net zero subscribers, but the targets that we set out for ourselves, that the initiatives that we want to follow, that we follow that in the most responsible way, but that we at the same time look at where our government is taking the initiatives in terms of transferring the energy mix to a completely different economy and look for investment opportunities in green solutions where we can invest. So we've invested billions of rands in industries that align with low carbon economy, such as renewables, as I said, energy efficiency and sustainable infrastructure. And of course, we intend for our exposure in green solutions to keep growing substantially so that we participate in this trend of what the investment opportunities are like and make sure that we keep the employment opportunities of our members intact.
Absolutely. Thank you so much, Sonia. Jobs, you are going to be my last question for this session. I mean, what we've been seeing in the South African listed space is, more unbundlings have been taking place. This is fairly welcome due to the delistings we've seen in the past. The question I have is, how does having a presence in different markets affect corporate restructurings and M&A deals? And what sectors do you see benefiting from the next wave of M&A activity in the country?
Thanks, Inga. I think a lot of M&A deal activity is really informed by the strategy of the time, if you like. And I guess it's worth just recapping in terms of what's happened in the last, I'd say, 5 to 7 years, where strategy has really had to respond to some material market and public capital markets trends. So if you look at what was happening, say, from the 2015-ish to about 2019, it was actually quite a very stable growth type environment, but also at the time weren't feeling that, it was a booming market. And then until COVID hit, and then we realized that actually things were quite great at the time. Then M&A activity obviously dried up in 2020, but then in 2021, we had record levels of M&A activity, whether you look at global data, EMEA data, or certainly South Africa or sub-Saharan African data, just because you had an aligning of stars on many fronts. One of them was that due to the various fiscal and monetary policy expansion policies, there was a lot of money in the market in an environment where inflation was low, very predictable, and interest rates were also very low. So, I mean, that's hallelujah for an M&A banker type market. So that's why it was a pretty good year, but very quickly thereafter, from I'd say the midpoint of 2022, where everyone was searching for growth, and people were trying to be opportunistic around finding some undervalued opportunities. We then had inflation, and then Russia came through, and then it became a lot more unpredictable to come up to a firm view on the appropriate cost to apply to money. I was quite happy to hear Taze mentioning that if you look at volatility in EM and DM, there's a bit of a recalibration. And in our space, in the M&A space, we often had to explain to our DM counterparts what inflation was, because that's something they hadn't seen for a very long time. But now we spend less time discussing inflation. And I think also from a market volatility perspective, there's also a bit of equalization that's happening on that front. Now, what does all of that mean in terms of strategy today? So the whole question around market presence and M&A trends speak to where we are today. So where we are today is that companies have moved away from will produce where it's cheapest after COVID and after Russia, and they're looking to have more stable supply chains and manufacturing capacity. So that drives a lot of interest, including here in Africa, just because we quite conveniently placed in the center, if you like, whether looking to the west or the east. So that in itself is driving those type of strategic thinking as well as M&A activity. Another trend that you're seeing, which is also very important in Africa, is that if you invest in the Pan-African story, in addition to all the elements, it's also the higher than usual FX volatility and in different currencies. So explaining the cost of money to a US-based fund or a DM-based fund is very tricky, because some of the risk premia applied to the cost of money on the continent is very interesting to debate in our space. But that's also a driver of M&A activity. So the stories that are really benefiting, or the sectors that are really benefiting on the trends I just mentioned, are stories where there can be synergistic benefits or economies of scale to combinations. And actually in South Africa, there are a lot of candidates for consolidation, whether you look at the resource sector, the financial sector. But those deals are very good on paper, but very difficult to execute just because of other regulations that apply, like competition, etc. So we should be seeing a lot of activity on that front, but also not just particular to South Africa, but there's increasing regulatory scrutiny on transaction, especially on the antitrust front. So that's why we're seeing less activity on that front. But the sectors that benefit are really the ones I touched before, but maybe some of the new ones are healthcare in the pharmaceutical space are very defensive, and the demand for products and services in that space is increasing. And to the points around infrastructure investment, we'd really hope that a lot of the investment would go into that sector because the demand is there, but capacity, there's a bit of underinvestment in that sector. And on the consumer side, one of the new very interesting trends is around e-commerce, because in line with the broader theme of digitization of money and transactions, e-commerce is really becoming thematic, including in South Africa and on the continent. It's more prevalent in other markets, but I think we're seeing a lot more interest around the space. So that's pretty much the trends that we are seeing and the sectors where we expect this corporate clarity activity that's driving some of the restructurings or the unbundlings to continue to keep us busy.
Thank you, Njabulo. And thank you, Sonia, Inga, Tace. We have run out of time, but I think if the MC will allow, just open the floor for maybe one or two questions to any of the panelists. Okay, I see 1, 2.
Can I talk straight away?
Oh, yeah. Please go ahead.
But they can't hear you on
Are you able to direct the question to a specific panelist? Yeah.
Well, I see you as a group of people, young men, hoping to lead the growth in Africa, who must be courageous. So, my main question, which I'll bring on later, is that are we running the risk of making our markets, capital and financial, an elite preserve, excluding many people out of the system? But I'd like to go through some of America's history and how they made their economies bigger by expanding largely. I look at the farm credits of 1947 and how it affected both the countryside and the major urban centers to produce food and make America the feeder of the world. I also look at Fannie Mae and Freddie Mac, with changing the credit quality of assets that came into the bond market, mortgage markets, and the rest of them. But I also know that those loosening led to the Bosky and McMillan, who we don't want the situation where it's the crisis on to the time we had crisis in 2008. And what I'm saying is that with South African leading, is it possible for us to reduce this idea of an elite exclusion, an elite preserve, we're making of capital markets and financial markets? Thank you very much.
Okay, thank you for that. The panelists online, would you able to hear that? Or Tace, maybe you want to take that one. The next question.
I think, Maurice, we are running short of time, so
Okay.
maybe we just do that one. I don't know, there was one more question.
Yeah.
If you could just keep it short and brief, please, that would be great.
Yeah, sure.
Thank you.
Yes, good afternoon. My question related to corporate governance. One of the risks, the question related to corporate governance. One of the key risks identified by Deloitte for the South Africa was the risk of corporate governance, mainly in the corporations with the state capital. So how do you think that South Africa should address that particular question? The quality of corporate governance to attract and to reduce the risk of investors to come to the market. Thank you.
Thank you, wonderful. So maybe Tace, I'll let you take the first one, and the second one I'll hand over to Sonia.
Perfect. I think when it comes to capital being the reserved for elites within Africa, I also think it's how savings are distributed often within Africa. So South Africa kind of stands apart from the rest of Africa in that it has a deep, large domestic savings pool, which is starting to develop in places like Nigeria and Kenya and Uganda, but not close to what it is in South Africa. And I think that the first part of making it less of a place for elite capital is through economic growth, through expanding incentives for savings. So South Africa are doing something similar to what you have in the UK in the form of an ISA. Now, so more growth, more employment, more savings, expanding the way for people to save through tax-free vehicles, I think is the first way to do it. Then people have more of an incentive to invest into the market because then I'm invested into my JSE All Share ETF or whatever it might be. And that is how you steadily grow that. But I think that the elite preserve is almost a function of partly of inequality and development. I think South Africa are kind of putting the steps in to do that, but they can only truly deal with it through growth, increased employment, broadening of that savings base. I think those are the ways to do it. There are some regulatory things you can do, but I really think growth is part of the answer here.
Thank you. Sonia?
Yeah, I hope I heard the question right, Maurice, and that is that how competitive is our corporate governance to other countries? Was that the gist of it?
Yes, and in particular, companies that do business with the state. Is that right?
There are companies, especially in exchange, that do have a state-owned capital.
Oh, yes. And
That's one of the main concern from the investors. Corporate governance models.
Yeah, and corporate governance of companies that have state-owned capital investors or in projects. Yeah, I think this is a great one for EPPF. Yeah.
Thank you. I'll take that one. Yes, so I think it's a fair comment to say that South Africa has had its own challenges on corporate governance level. I think the grey listing that that the country is actually working very hard at to make sure that we put the right measures and controls in place to make sure that the system operates better, is in response to the fact that our global counterparts and dealing and trade partners globally were saying that more work needs to be done. I think it's something that's echoed in the public sector in South Africa as well. And ironically, I mean, many years ago, South Africa has been extremely strong from a corporate governance perspective. I think the legislation is put in the right place. I think a lot of work has been done to clean up the way that we report, how transparent we are. But there certainly is a level of mistrust still in terms of how government and other corporate entities work together and how things are disclosed and how we regulate for that in South Africa going forward. I think it will take a little bit of time to clear out all the spider webs in the system that's currently there. But needless to say that it is getting the necessary attention, that it is getting the highest priority from our government, that it's getting the highest priority from our regulators. And with the pressure of global investors as well as local investors that want something similar and to put us back on the path of really being a global leader in terms of corporate governance, a lot of work has already happened and more work needs to happen for us to get to that point. But I agree that is a challenge. That's not 100% solved yet, but I think there's a lot of good progress made also under the new government of national unity to move us there.
Wonderful. Thank you. And with that, we're closing this panel and invite you to enjoy the next set.